Kind of just wow. I mean, what else is there to say this morning other than wow? Well, let's dig in and find out why. I'm saying just wow and more wow. Elon Musk is replying this morning to an ARK Invest posting. He says, I'm curious to read this, that they're talking about the ARK Invest reports that came out today. He says, the more I think about robotaxis and humanoid robots, the more absurd the valuation becomes. I could just stop there. That would be a fine, that would be a good enough quote for me for the day, and we could just call it a day. Anyway, here were the headlines from ARK Invest Big Ideas. And then also they gave their price valuation for Tesla. So their big ideas were as follows. ARK forecasts that electric vehicle sales will scale 33% at an annual rate during the next 7 years, from roughly 10 million in 2023 to 74 million in 2030. This would pretty much mean that by 2030, they're continuing to predict that ICE will be gone. It will have melted. There will no longer be an ice age to worry about. As hardware, they go on to say, as hardware and software costs decline, according to Wright's Law, AI should continue to improve productivity and create a new market opportunity for generalized robotics that at scale exceeds 24 trillion in revenue annually. Now that creates a problem with their other report, which I'll show you in a second, but 24 trillion for the robotics market annually coming up. All right, that's according to these guys. According to ARK's research, robotaxi platforms could redefine personal mobility and generate 28 trillion in enterprise value during the next 5 to 10 years. So we got to recognize these are two different things here. So on the robotics, it's saying 24 trillion in revenue, not value, revenue annually. And then for robotaxis, 28 trillion enterprise value, a very different thing. The enterprise value going to be multiple times higher than the revenues, of course. According to ARK's research, autonomous delivery revenues could scale from essentially nil today to 900 billion. Now, this is just the semi-truck part of this, and or it could be, local vans and stuff. I haven't read the report yet. I'm just giving you the headlines. Later on, I'm going to read the report. I may do a special edition later today, or maybe I'll do that tomorrow, but I think this will be worth looking into in detail. And I'll, if I think it's great, I will come back to you and give you more. So anyway, just the autonomous delivery revenue could scale from essentially nothing to 900 billion in 2030. That would be a very big market. Finally, the ARK price targets for Tesla. Now, that was in my thumbnail, but this is what, according to Walter Bloomberg on X, he goes by the handle Delta1, DELTAONE. He says, ARK Invest in bullish analysis, probability that Tesla could be worth 3,100 per share or more in 2029 is 25%. That's $3,100 per share is 25%. ARK Invest, the bull and bear cases for Tesla are approximately 3,100 and 2,000. So if you got the bear case, you're coming in at 2,000, but their base case, as you know from my headline, was 2,600. So the key thing here is, though, that none of that includes Optimus. This is what they say about Optimus. We assume that Optimus will have minimal impact on our price target. Over the next decade, we expect Tesla to become a leading manufacturer and service provider of robots that move through physical space. Note, during the next decade, as it will have the opportunity to leverage learnings from robotaxis as well as its in-house inference chips, training compute, and manufacturing scale. Tesla expects Optimus to be completing useful factory tasks by the year end. Well, they just announced that it happened just now. Assuming that we're able to subsume 10 to 20% of Tesla's labor hours worked with productivity equal to or twice that of human counterparts, Optimus could save Tesla 3 to 4 billion or 1 to 2% in manufacturing costs in 2029. That would be a nice thing all by itself. Our research suggests that generalized humanoid robots represent a 24 trillion global revenue opportunity at scale, 24 trillion in revenue, about 50% of that in manufacturing. Should it decide to sell Optimus externally, should it decide to sell, they've already said that by the end of 2025, Tesla could capture a significant share of this multi-trillion-dollar market, though the meaningful, listen to this now, the meaningful commercialization ramp is likely to happen beyond the 5 years captured in this model, and yet their 2029 dollar value was at almost $30 trillion. Okay, anyway, I don't know. I can't. The two reports together doesn't. Anyway, what does Elon Musk have to say about all of this? He says they, meaning ARK Invest, have been the most accurate predictors of the value of Tesla. All right, then Gary Black has this about the China numbers overnight. He says for the week of June 3 to 9, Tesla China reported 12,000 insurance registrations after 10 weeks. Second quarter is 13.6 quarter over quarter and negative, up 13.6 quarter over quarter, but down 7.4 year over year. That down 7.4 is about where we've been all year. All right, then we've got AJ coming in. He says news. The European Union hits Chinese EVs with up to 38% tariffs from 4th of July. Starting on the 4th of July, they will be having tariffs at 38% maximum. Previous estimates assumed much lower, 20 to 30%. This ruling far exceeds all expectations. Tariffs will vary. BYD will be a 17.4%, Geely at 20%, and SAIC at 38.1%. The remaining Chinese exporters to the UE face mostly the higher end of the 38.1 unless they cooperate and provide data, lowering the duty to 21%. By providing data, Tesla has a chance to lower duties to 20%, 21% on the exported models, meaning the Model 3. Remember, the EU is already charging 10%, while China charged 15% on models going the other way. This should be a help to European sales of Tesla Model Ys, and then we'll have to see what happens with regard to Model 3s, but in any case, the pricing will be going up on Model 3s. All right, this is Randy Kirk, by the way. Hit the like button, the subscribe button, and the notify button. You've got Brian White later today, and then Jeff Lutz tonight, unless I interrupt the later today with a report on the ARK report. I might report on anyway. And then, of course, Patreon. After a very good run last week, you guys are starting to let me down on Patreon. Anyway, it'd be lovely to have a few folks joining up. Now, for the other wow. I mean, wasn't that enough wow? Should I just stop? Well, but there's more good news. I mean, it was pretty much all good news today. The Consumer Price Index for all urban consumers was unchanged in May. Unchanged. That means it was zero. Unchanged is kind of a soft way of saying it. In other words, it didn't go up in May. So it was expected to only go up 0.1%. So already the economists who were surveyed only thought it was going to go up 0.1%, but it went up 0.0%. After rising 0.3% in April. The U.S. Bureau of Labor Statistics reported over the last 12 months, the All Items Index, this is the headline index they call it, increased 3.3%. Now that's before seasonal adjustment, but that number was expected to be 3.4%. Well, okay. Then more than offsetting a decline in gasoline, the index for, because it was a big decline in gasoline price, the index for shelter rose in May up 0.4%. For the fourth consecutive month, up 0.4%. The index for food increased only 0.1% in May, but the food away from home continues to go crazy, up 0.4% month over month, while the food at home index was unchanged. And the energy index fell 2.0%. And the gasoline was the biggest part of that, falling 3.6%. Okay, then the index for all items less food and energy, this would be the core. This is what the Fed pays the most attention to, rose 0.2% in May. That's not good enough for the Fed. That would be a 2.4 per annual rate, but it was better than the expected 0.3%, and it was 0.3% last month. Indices increased in May included shelter, medical care, used cars and trucks were increasing, and education increasing. The indexes for airline fares, new vehicles, communication, recreation, and apparel were those that decreased for the month. So the only thing I can figure here is if this is true, which is not what I'm expecting, is airline fares and recreation, et cetera, might have overshot their mark. I was also surprised to see new vehicles see, this was decreasing, yeah, and used vehicles increasing. Both of those were a bit of a shock. Okay, the all items index rose 3.3% for the 12 months ending May, but that was also a beat because those who were polled expected a 3.5% increase. And that is also a smaller increase than last month's 3.4. Now, overall, this would be a very, very, very good report. However, I don't think it's going to be enough to move the needle with the Fed. I think this will be, I don't think it's going to change their mind about anything much. It's the right direction. However, we don't want to have any, there's nothing negative about this report. This is a positive report. It's directionally in the right, going the right way. The Fed is looking for directionality. They don't want it to get all the way to 2% before they make a change. But here's what the 𝐂𝐫𝐲 letter says this morning. Prediction markets officially price in 2 interest rate cuts this year after the data. The odds of no cuts fell from 33 to 24% over the last few minutes. Meanwhile, the market implied odds of exactly 2 rate cuts has spiked from 21% to 35%. So we've gone kind of flipped that. The 2 rate cut problem for me, as you know, and that continues to be a problem for me, is that in order to have 2 rate cuts, you would think the first one might have to be in September. I don't think that's going to happen. Now, if there's a rate cut in July, which would be a real stretch, but maybe if the PCE and the next CPI come in good, maybe we can see a rate cut in July and then another one in November. That's a possibility. I just don't see them cutting rates in September unless they have to. Not they want to, not that it would make sense, but that they have to because something's gone wrong, okay? Like labor, blah, blah, real evidence that the market is going really, really bad. All right, less than 2 months ago, according to 𝐂𝐫𝐲, the base case showed 0 rate cuts in 2024, with with odds of a rate hike actually spiking. Well, I don't think a rate hike is completely off the table, but it's about as close as you can get at this point. And I do think I continue to say 0 cuts this year is my base case, but I have always said I think there's a pretty good chance of a one cut in November. All right, let's see where the markets are now after all of this. Well, Tesla is screaming higher at up $4.59. The market is actually, okay. The Dow Jones is up 210, but it's falling from its high of the day already. The NASDAQ, on the other hand, is continuing to go up. I think that Tesla is helping that. It's up 319. Did I say the Dow is up 213? NASDAQ up 319. S&P is also continuing higher at 68.60 up. You've got Apple going up another 8. I believe Apple went back to being the #1 value company in the world. I'm not 100% sure of that. Don't quote me on that yet, but I think I saw that headline. And this would certainly help them to continue in that direction, up $7.83. And you've got Meta is the only one of the Magnificent Seven down 19 cents, with NVIDIA up 565. Also, that would be, remember, pre-cut, that would be a $55 increase because it was at 10 for 1. So NVIDIA also impacting the NASDAQ increase dramatically this morning, up $55. Maybe that we can let's just do a quick check. We have time. So NVIDIA is now worth 3.13 trillion. We have got Microsoft worth 3.25 trillion, and we've got Apple worth 3.3 trillion. I was right. Apple is now the most valuable company on earth again, with Microsoft second and NVIDIA dropping to third. Okay, well, that's all very interesting. Let's also look here real quick. We've got the percentage numbers here are the Dow is up 0.54. The NASDAQ is up 1.87% this morning. The S&P up 1.29% and Tesla up 2.92%. You have got the Cathie Woods are mostly up, with PayPal, however, down 1%. The rest of them are up. All right. Let's go ahead. I've got this really quick headline coming in from Sawyer Merritt. ARC estimates that nearly 90% of Tesla's enterprise value and earnings will be attributed to their robotaxi business in 2029. Randy estimates that nearly 50 to 60% of Tesla's enterprise value and earnings will be attributed to Optimus robots in 2029, and about 35% will be attributed to robotaxi. Okay. So let's go on to the rest of the market here. We do know, of course, you're going to guess correctly. I know you guys, you know this stuff now. After following me for a minute, where do I go next is bonds. So what do you think has happened to bonds this morning? Well, the bonds 10 years are down 12.9 basis points to 4.273. We haven't seen a 4.2 handle in quite a while. You've got the 2-year down 15.2 basis points, and that spread is now 441 basis points. But the 2-month is only down, well, basically call it unchanged. And so that is now 110 basis points different. That spread widening way over 100 for the first time in quite a while. Again, the history books will want to know what happened on that one, on the entire thing. So then, let's go on to oil. Oil was going higher earlier. Let's take another look. Oil is up, it's up another $1.17, 1.5% on both Texas Intermediate and Brent. You've got Texas Intermediate almost, 79, heading towards 80. You got Brent at 83. Both of those are going back into the higher end of their range. This in spite of a big headline I saw this morning that predicts that oil will be abundant by the end of the decade. It'll just be pouring out of. There'll be so much oil we won't know what to do with it. Oil. Natural gas down this morning, 0.77, but still over $3 at 310. We've got gold gaining $17 this morning, or 0.75%, back up to 2,344, 2,344. Silver up 2.51% at almost $30 again, and copper up a full 1%, sitting at $4.55. The dollar dropping on softer than expected inflation. That isn't, okay. The real reason it's dropping is because interest rates are dropping, and that makes folks want to put their money into foreign bonds that are possibly more giving a higher rate of return. Okay, crypto returning, Bitcoin popping this morning, wiping out almost all of that loss of yesterday, pressing right up against 70,000 at 69,800, up 2,487. And there you go. That would be all of the numbers, except for going back and double checking to see what's happening with Tesla at this exact moment. Continuing to scream higher, another point up, $5.54 up. Now, the question is, how much of that is excitement over the beat on the inflation rate? How much of that, and the interest rates going down, which is a very good thing for Tesla? How much of that is excitement over the Cathie Woods ARK Invest increasing their base case from 2,000 to 2,600? How much of that is excitement over the tariffs helping Model Y sales in Germany? How much of that is people finally saying, you know what, we think it's going to pass tomorrow and we want to be ahead of that play? I don't know. This is but 5.77 right now. That is a 3.38% increase for Tesla today. We will take it, sitting at $176.43 at this exact moment, but with a straight up curve like that. All right. So what do you want to do? You want to hit the notify and all those buttons, hit those buttons for me. It helps me so much if you just kind of hit those buttons. And then, join Patreon. But what we really want to do is go back. Yesterday, Scott Walter, we were sad. We were sad at how few people watched Scott Walter yesterday. I mean, this was a really good video. It was really valuable. There was tons of cool stuff in that video, both about space. We talked a ton about what's happening with regard to SpaceX, and we talked a ton about what's happening with robotics right now. And robotics, believe me, it is where you are going to get most of your wealth if you're invested in Tesla. It's going to be the biggest thing. And 𝐲𝐞𝐬𝐥 Invest, for the first time, I'm very dissatisfied with that part of their report. The rest of it, pretty good. But Optimus, it's ridiculous. Nonsense. She needs to call me. I'll set her straight. Anyway, okay, that's all I got for you right now. See you much later, several times later today. It's been great talking to you.